Welcome back to Iraqi Dinar Alert, your go-to channel for the latest developments. Today, we're diving deep into a topic that could change everything: the sweeping banking reforms happening in Iraq, driven by a crucial partnership with the United States. Could this finally be the turning point we've all been waiting for? Let's break it down. For decades, the Iraqi dinar has been a story of hope, speculation, and frustration. Investors, analysts, and everyday Iraqis have all wondered if the dinar will ever reclaim its former strength. Now, a new element has entered the picture: major banking reforms. These aren't just minor tweaks. They're a fundamental overhaul of Iraq's financial system, and many believe they could pave the way for a stronger dinar. So, why did Iraq's banking system need such a drastic change? For years, it was plagued by deep-rooted problems. Decades of conflict, sanctions, and corruption left it isolated from the global financial network. Most business in Iraq was done with cash, and international banks were wary of dealing with Iraqi institutions due to risks of money laundering and terrorism financing. This isolation was a heavy anchor on the dinar. Without trust and transparency, it couldn't function as a strong tradable currency. Foreign investors stayed away, and the Central Bank of Iraq had to rely on constant currency auctions just to keep the exchange rate stable. This is where the United States comes in. The US plays a central role in the global financial system, especially with the dominance of the US dollar. Since Iraq's oil revenues are paid in dollars, its banking sector simply cannot function without American cooperation. In recent years, U.S. authorities have been working closely with the Central Bank of Iraq to push for reforms. The goal? To increase transparency, clamp down on money laundering, and stop the illegal flow of dollars out of the country. These efforts ramped up after reports showed that billions of dollars were being smuggled out of Iraq through fake invoices and other illicit schemes. In response, Iraq agreed to modernize its entire banking system, adopt international compliance standards, and implement new digital systems to monitor every single dollar transaction. So, what have these reforms looked like in practice? One of the biggest changes has been the launch of a new electronic platform for international money transfers, developed with US oversight. This system forces Iraqi banks to provide detailed paperwork for every dollar they send abroad, including who is receiving the money and why. On top of that, Iraqi banks are now required to comply with global anti-money laundering regulations, improve their internal auditing, reduce their reliance on cash, and strengthen their relationships with major international banks. Now, these changes haven't been easy. In the short term, the stricter controls actually caused a dollar shortage in local markets, which temporarily pushed the dinar's value down. Some people were quick to blame the reforms for rising prices and instability, but economists see it differently. They argue that this short-term pain is a necessary part of a much-needed cleanup. The instability simply exposed weaknesses that were always there, hidden by a flood of unregulated dollars. By shutting down these illegal channels, Iraq is forcing its economy to operate through legitimate, transparent banking pathways. This transition is absolutely essential if Iraq ever hopes to rejoin the global financial community, attract foreign investment, and reduce its dependence on the black market. In the long run, a transparent banking system builds confidence, and confidence is the bedrock of any strong currency. This brings us to the billion-dollar question. Will these reforms lead to a dinar revaluation or significant appreciation in value? Let's be realistic. Banking reforms alone won't cause the dinar to revalue overnight. That's not how it works. What they do, however, is create the essential conditions for stability and future growth. Think about what a strong currency needs: a credible central bank, transparent policies, stable government revenues, and international trust. The Iraqis' banking reforms are directly addressing several of these key pillars. As Iraqi banks become more compliant, they gain access to global markets. This makes the dinar a more reliable national currency, not just a local token for exchange. And what about foreign investment? This is another huge piece of the puzzle. Investors are watching these banking reforms very closely because it tells them how easily they can move money into and out of the country. By aligning with global rules, Iraq is sending a powerful message. We are open for legitimate business. Improved banking makes it easier for multinational companies to invest in Iraq's oil sector, infrastructure projects, and even its growing tech scene. More investment means more jobs, a stronger economy, and greater demand for the dinar within Iraq itself. Over time, this could reduce the country's reliance on the US dollar for daily life, further strengthening the dinar's position. Of course, the road ahead is not without its challenges. There's still political resistance from groups who benefited from the old, corrupt system. Some Iraqi banks still don't have the technology or training to fully comply with the new international standards. And public trust in financial institutions, after so many years of instability, is still fragile and needs to be rebuilt. On top of all this, global factors like oil prices, regional politics, and even U.S. monetary policy will continue to influence Iraq's economy. So while banking reform is a powerful tool, it's not a magic wand. So is this the turning point? While it's probably too early to declare a complete transformation of the dinar, these reforms represent one of the most serious and credible steps Iraq has ever taken toward financial normalization. For the first time in a very long time, Iraq is actively aligning its banking sector with global expectations instead of operating in isolation. For those of us watching the dinar, this moment shouldn't be seen as a guarantee of an instant payoff. Instead, it's the foundation being laid for a stronger future. Strong currencies are built brick by brick, not announced in a press conference. Let's wrap this up. The partnership between Iraq and the United States on banking reform signals a major shift in strategy from short-term fixes to a focus on long-term sustainable stability. If these reforms continue, if corruption is tackled head-on, and if the economy successfully diversifies, the Iraqi dinar could one day reflect a much stronger, more prosperous Iraq. Whether this truly becomes the turning point depends on consistency, political will, and patience. But one thing is absolutely clear. The path to a stronger dinar no longer runs through speculation, it runs through reform. Thanks for tuning in to Iraqi Dinar Alert. If you found this analysis helpful, be sure to hit that like button, subscribe, and ring the bell so you never miss an update. We'll see you in the next video.